Welcome back to my channel for another video. So here this week, guys, we've got something a little bit different. So this is the DAX. It's been a while since I've traded the DAX, been quite a while. So this is actually first of all, it's three positions, but the initial two positions were actually pre-market positions. So pre-market on the European Open. So the first position, I have to look at a cheat sheet here. It was actually a short position which netted a £274 return. That was a pre-market position. The second position was me playing the recovery and it netted a £231 return. So again, this was pre-market. The last position was another short position after the open, and this netted a £508 return. So I think what's really important, guys, is that you have to be diverse, okay? There has to be an element of diversification in your approach. So hence why the first two positions were actually pre-market. I seen an opportunity, I seen a rally, played the pullback, and then played the reversal, okay, or the recovery. Waited for the open, and then waited for a while for that position, took that short position out. So all in all, three positions, £1,000 return. And again, I've said before, this is a demonstration of the diversification that you must implement if you want to, have an overall, diverse approach to the market. And it is important to have a diverse approach. So I hope you enjoyed this week's video. As usual, guys, make sure you smash that like button. Make sure that you subscribe to my channel for more videos like this. And if you want to contact me and find out what I do in my financial community with my students, you can contact me at sambora.00. I also have a website where I explain more what I do with my students. So the website, you can see that. The link is in my bio on my Instagram page. I hope you enjoyed this week's video. Okay, so the DAX. Been a while since I've traded the DAX. Okay, so what I'm looking at here is there's this rally that's taking place, as you can see. So this is pre-market. Okay, so 7:42. So market opens in just under 20 minutes. So I've taken this short position here, and again, it's the same kind of approach. That space is after being created. There's after being a rally. So what goes up must come down. So I'm gonna hold this for a bit. The intention here is to hold this and then go back in at some stage, either another pre-market position or possibly maybe just on the open itself. So I'm gonna hold this for a bit. But again, these are the approach. This has to be the approach that you must adopt. You have to implement a level of diversity within your trading strategy and your approach to the market. Yes, the majority of the time I would always say, wait for the open. And this is the only time that I would ever trade pre-market, is when these opportunities arise. I mean, if this was all mid-range stuff here, I wouldn't be taking a position because, that space hasn't been created. So it's really important that you understand why, you take these positions pre-market, and it's to do with that space that's after being created, and it has to give back something before the open. This is how the stock market works. It has to give back something before the open. You can't just keep taking and taking. It has to give something back. Okay, so this is how the stock market works, and you'll see it's quite slow. And usually in the pre-market, there's not a great deal of volume in there because the European stock market hasn't actually opened yet. So therefore, there's not a great deal of volatility, because that volatility comes from volume. Hence why when the stock market opens, i.e. the European Open or the US Open, sometimes it's extremely volatile in the initial seconds, because it's that influx of volume into the market. Okay, so gonna hold this for a bit, see what I can get out of this. Yeah, probably won't hold it for too much longer. You kind of just get a sense of when you need to get out of these positions, and it's going to reverse. There's a lot of different things that I'm looking at here, a lot of different things, and look at that little sell off there and then a rejection. But there's a number of things that I'm looking at here. This is not just sitting here and hoping that this goes down. This is all based on a particular approach. I've got two patterns that I use in the market. Two patterns only, but then there's a number of elements, to that. So I'll take that. So 274. So I've then gone back in again 2 minutes before the open, and I've taken a long position. Okay, so you can see that the blue line, that's where I've taken my long position. And again, this is all based around these patterns that I've identified, and it's not enough to identify the patterns. Okay, it's not just enough to identify the patterns, it's all to do with timing as well.
You know, what time do you trade? That's got a lot to do with my approach to the marketplace as well. And there's other things as well, you know, space that's being created and a number of like rejections, consolidation, all this kind of stuff. There's a lot more to it. There's a lot more to it, you know, and you know, yes, I'm making this look very easy, aren't I? So that's another 258, I'll take that. So this is actually, I've went in at 8:30 here, okay? Well, just before 8:30, so I waited a long time. Once the open actually took place. And again, this is all based around my approach to the marketplace. You know, none of this is random. Every single position that I take up, it's for an actual reason, okay? It's for a precise reason, and it's all to do with, you know, how the stock or the indice in this case is performing. Okay, so none of this is random. And again, you know, I'm making this look very easy, aren't I? But yeah, you know, this has taken me many months to perfect my own strategy that I implemented. So, but it's effective. It's very effective. You know, my running success rate is just over 88%, which, listen, absolutely fantastic, isn't it? An 88% return rate. Okay, so that 12% or just below 12%, that's where I need to be cutting my positions short when they start running away from me. But as you can see, look at this lovely sell-off here that's taking place, and it's kind of getting to the stage here where I might pull the plug in this in a minute or two, because I'm actually holding this for quite a long time. You know, this is, well, I suppose this last position here that I'm taking, it's almost like a swing position approach, an intraday swing position approach. And am I going to get much more out of this? Maybe not. Maybe another 100 quid or something like that. It's not, and you know, because I basically trade with the same position sizes most of the time, so I kind of know, you know, in terms of the indice that I'm trading, I know what I need to look for. You know, I just know, just through doing it so many times. It's to do with the movement, to do with the space that's been taken or given back. I get a rough idea how much I can get out of this. So there's a little reversal here taking place. Look at that. So I might have to pull the plug on this. Let's just see what happens here. If it continues to reverse and go bullish, I might just have to take like maybe 250 if it pushes up too much. Well, let's just see there. Let's just wait and see. Patience is bloody key, I'm telling you. Patience is key. You gotta know when to hold. You gotta know when to liquidate your position and get out. But listen, that takes time. It takes time. It's not something that you can just identify and implement overnight. This stuff takes months, not days or weeks, months and months. And listen, some people don't pick this up for many months, but that's fine. That's fine. There's no law that says that you must pick it up in a certain time frame. Everybody learns at a different speed. But what am I going to do here now? Because I'm starting to think that I might not get too much more out of this, and it just depends. You know, every single movement here is telling me something. You know, none of this is random. So another little push down, and I probably won't get too much more out of this, to be honest with you. No, probably won't. So I'm thinking I might just take this now. Let's see what it wants to do here. Does it want to push down through them support levels, or is it happy to operate in that tighter range there? What to do? Okay, I think I'm just going to take that. Yeah, let's just take it.
So there you have it, guys. So £1,000 return on the European Open on the DAX. Again, you know, these are the things that you must implement. You must implement, but it is important that you become educated and identify why you take these pre-market positions, because if you don't know what you're doing, these pre-market positions can be very much a gamble. So it's very important that you become educated and understand why you're taking these pre-market positions. So again, guys, I hope you enjoyed this week's video, and I'll see you next week for more videos. Again, if you want to contact me, you can contact me on my Instagram, and that's sambora.00. As I've said before, guys, you know, my financial community is growing on a daily basis. I post, you know, things daily in terms of what my students are saying, so you can see for yourself, you know, how my students are doing and the approach that we have to the market, etc. So I'll see you next week again for more videos.